Hi everyone, Chris Jansen, Ben Gower Harcourts. Today we're coming to you with a property finance update by the guru himself, Simon Beck from Significant Financial Solutions. Mate, thanks for joining us today.
Thank you, Chris.
Really appreciate it. Simon's come in today because there's been some changes within the banking industry over the last sort of 2 to 3 months, and we thought it was really important for us to get an expert in like Simon to give a really informative update what banks are doing at the moment in the current finance climate. So Simon, thanks for joining us, mate. What's happening out there at the moment with banks, interest rates, RBA, everything in between?
Okay, what's happened in the last 2 months is the banks are regulated by APRA. So it's APRA's responsibility to ensure that the banks are lending money responsibly.
Yep.
And the big thing at the moment the banks are hot on is interest-only lending.
Okay.
So what the banks have come out and said, they've looked at all the banks' portfolio of loans, and they've said the banks have a large portion of their loans, 40%, which are interest only. So out of the entire portfolio, on average, 40% of the loan portfolio is interest only.
Wow, that's across Australia.
Yes, across Australia.
And all banks.
Most of the banks, the average is around 40%.
Right.
So what the regulator APRA has said is we need to start being more responsible with interest-only lending. So what APRA is concerned of, in these times of low interest rates, they're basically concerned that people are getting themselves in too much debt.
Okay.
So they're going out getting interest-only loans, which basically the repayments, the rental repayments from the property are covering the expenses of the loan, but they're worried about what happens when the loan needs to be converted back to principal and interest. So interest-only loans do not last forever. They can go anywhere from 1 to 5 years.
Okay.
So at the end of the interest-only period, all of a sudden the repayments may jump from $900 up to $1,600 per month.
Wow.
So they believe that this could potentially put families under financial pressure. Where they're going to find that extra $600 from.
Yep.
And if interest rates rise, that's another element. So it's not only converting the repayment back to principal and interest, it's also being considered if interest rates rise, can they afford the loan?
Okay, that's really interesting because we deal with a lot of buyers that are investors as well through to mums and dads upgrading. So let's say hypothetically, because I went through this myself recently as an investor, we looked at a product through CBA about 2.5 months ago. They were offering a certain interest rate at that time. We revisited that refinance just recently and that had changed. And I know you've coached me and not everything's based on interest rate, it's about the right product too, but can you just explain why that interest rate changed from what they offered 2.5 months ago to what they're offering today?
So recently, CBA actually put a stop on refinancing all investment lending. After APRA come in and said we need to be more responsible, CBA's initial reaction was we're no longer refinancing any investment properties. That has recently changed in the last 2 or 3 weeks. We wanted to refinance your loan to be interest only.
Yep.
For the tax benefits of being interest only and an investment property. Now CBA are only refinancing investment properties to principal and interest repayments. So they're trying to encourage people to pay off their investment mortgages.
Right.
Can I just talk about the reason why people choose to go interest only on their investment properties is there is a tax benefit. So any of the interest payment towards the investment property is tax deductible.
Yes.
Versus if you've also got owner-occupied debt, you should be concentrating on paying that owner-occupied debt off before paying your investment debt off.
Yep.
So by making the investment debt interest only, potentially you could be freeing up $500 to $600 per month versus if it was principal and interest.
Okay.
The repayments may be $1,600 per month. Interest only, they may be $900. So all of a sudden, you've got $600 which can go towards paying your owner-occupied debt off faster, which is more beneficial as owner-occupied debt is bad debt. So until we get rid of the bad debt, why do we need to start repaying the good debt?
Exactly. And that was one thing that still rings very clear to me this day. You said, Chris, use your investment debt for taxable benefits, so you can knock down the principal of your own occupant debt quicker in time, obviously, because that bad debt, the quicker we get rid of that, the better. The other debt, yes, it is debt, but at least there's some tax benefits within that debt.
Correct, and that leads me to another point. Banks have also tightened down. You used to be able to have an investment property where you could have interest-only repayments at 95% of the property's value,
Yep.
or 90%. So to do with the recent recommendations from APRA to the banks, a lot of banks are now only lending interest-only at 80% of the property's value.
Okay.
So yeah, there's a lot happening in the climate of banking.
Yeah, so it sounds like banks are being cautious at the moment, irrespective of what RBA may be doing with keeping interest rates, as they are. I experienced it from a rate we looked at 2.5 months ago to today. There was nearly a full % increase in that investment interest-only product. So what do you see this, I guess, looking into the future for the everyday investor, the mum and dad, or anyone wanting to get into property? How do you think this change will impact the consumer out there directly?
I think with all the changes happening, like we've touched on a couple today, but I think this is more the reason why you need to be speaking to brokers like myself and other brokers. I guess what a broker's trying to do, I'm trying to understand your individual circumstances, and basically I'm looking for products and banks which fit your individual circumstances. It's not always about the best interest rate, it's about tailoring a solution to where you fit in the market.
Absolutely, and we find as real estate agents, when we're dealing with finance and contract, the most common problem comes about more so with banks than brokers, because it seems banks, don't get me wrong, they do a great job, we need them, but there's a lot of mentality at branch level of submit the application and see how we go. You're just going to get that standard product and rate, whereas I found with you, when we met 2.5 months ago, to what CBA offered, to then revisiting that just a couple of weeks ago, you were very extensive. I mean, we were together for nearly 2 hours, and you were plugging in your tools and your system, so I could see live, then and there, what bank was best on your recommendations.
So I guess the biggest thing we've all got a relationship with a bank. You can go to the bank, but I guess the biggest difference is the bank can only offer you the set products which they have, while versus coming to a broker, I can look across 35 lenders and based on your situation, select the right lender for you.
Yeah.
And just going back to talking about how banks are tightening up their interest-only lending, that also, there's a number of really hot specials out there at the moment. So being an investor, that the banks are trying to encourage people to pay down their debt. So there's a number of banks, Bank SA at the moment, their interest rate on principal and interest, repayments of investment debt is 3.99% over 5 years, and the interest rate on owner-occupied repayments, principal and interest is also 3.99%. So these are some of the benefits how banks are trying to incentivise that. Yes, there has been a hiccup with interest only, but they're trying to encourage through low interest rates on principal and interest.
Excellent.
So I guess, Simon, a question that I have for you of being in the market is that we have a lot of people that come to our open homes, and some people have been approved for finance and other people not so. So when would you as a broker recommend someone to find out exactly what their financial position is before they enter the market? Where would you suggest that they come and speak to you? At what point?
I would suggest when you believe that you've got sufficient deposits and savings, before you actually go, have a little bit of a look on properties and work out how much the properties you're interested in costs. But before you start attending the opens, I think it's a good idea to engage a broker, so then the broker can discuss with you your borrowing capacity, how much deposit do we need to buy this property at $400,000. So the deposit is one element, and then based on our incomes, can we afford the proposed loan to buy that property? As it's really important to have that information to hand, otherwise you could be looking at properties above your price range, which ultimately means you may be disappointed when it comes time to wanting to buy that property. not
Mhm.
being able to.
Okay. So would you encourage the everyday consumer and buyer looking to get into the property market to go and talk to the bank first, or get an opinion from the bank and then come to you, or what point do you think's best?
So what I'm happy to do is that if you bank with Westpac, when you go engage a broker, what I do for my clients, I will ask the client, who do you bank with, Chris?
Mm-hmm.
You may tell me I bank with Westpac. And a lot of people are loyal to their bank, so it is important to understand what can their local bank do for them.
Mm-hmm.
So what I'll always do is I will always discuss what products Westpac can help you with,
Mm-hmm.
and then I will compare that with other lenders on the market.
Okay.
So then you're making an informed decision.
Mm-hmm.
If you decide to have your loan with Westpac, you've looked at 2 or 3 other options.
Yeah, brilliant. I mean, I must admit I've been with a bank for many, many years, and we all get content and complacent just because it's the norm and what we're used to. But I've seen light and day, you coming out and meeting with me, looking at what is to what can be, and it's a much better picture with what we're considering now personally. So thank you. So the last question I want to ask you, who pays you? So if you come and see me, do I pay you for that consultation, or do I pay you for the business? How does it work?
Okay, so basically the broker network is a channel of the banks. So what the banks, I'm basically acting as an agent for the bank.
Okay.
So my service to you is free. However, I need to live and get paid. So what happens is, if you settle on your property in June 2017, I will get paid by the bank the following month, July.
Okay.
So the bank pays me an upfront commission
Okay.
for my initial work of helping you get the loan and my expertise. And then for the life of the loan, it's just not about the sale today. I also get paid a trail commission, where I'm basically there to act as your mortgage manager throughout the life of the loan.
Okay.
So if you've got any queries regarding your mortgage, I'm here to provide ongoing support.
Fantastic.
That's great.
Excellent. All right, guys. Well, that's some really useful information. It's been a wonderful learning for me. Hopefully, you take some real meaty information out of that if you're looking at financing and getting into the property market. Simon, lastly, thanks for joining us, mate. I'll get you to give the viewers your mobile number, because I reckon there's going to be a few people who want to get in contact with you. So if you just want to shout out your mobile number, mate, so people.
Hey guys, thank you for listening to my chat with Chris and Ben. If you have any questions about your existing home loan, or you're looking at buying another property, whether it be upgrading owner-occupied properties or buying an investment property, please feel welcome to give me a call. More than happy to sit down and have an initial conversation. My number's 0414 437 061.
Beautiful. Thanks, mate. Appreciate
Thanks,
it.
Chris.
No
Cheers.
problem.
Thanks, Betty.
Thanks, mate.
Cheers.